first to the Bank of England. Do you just look at pound? Do you look at the kind of, the pound dynamics? And what would a fresh election, if it's not impossible, what would that do to currencies?
Well, first of all, great to be here. Thank you very much for inviting me back. So I think the last thing that investors in sterling or in UK stock market want right now is another election. You've clearly seen the pound being hit recently, a combination of strong dollar broadly, so the dollar's been strengthening against all currencies. The pound's been hit in addition to that by some weakness in UK data, by the Bank of England talking down expectations around interest rates, and then recently by yet another increase in political uncertainty. So going forward, I think what's going to be critical for the pound is what's the path of interest rates we're going to see here in the UK, and do we see some reduction in that heightened political risk? Okay,
talk to me about Eurocable. This is probably the chart that hasn't really moved. I don't know whether it's range bound since September 2017, and what will it take for that pairing to break away?
So I think if you want to see sterling rally significantly from here, then what we need to see is, first of all, some signs of an acceleration in UK growth. Now, that's been lacking. Our own indicators of UK growth have been extremely weak. Actually, in the last few months, they've weakened further. So we're forecasting growth of only 1 to 1.5% GDP in the UK over the next 12 months. That's weaker than we're seeing in the rest of Europe. It's significantly weaker than we're seeing in the United States. So what that implies is, in our view, one interest rate hike here in the UK, very gradual move. We don't think that's going to be enough to cause that chart to break out higher.
So we've been having a little debate this morning. Should we or should we not carry Carney live? And the reason I thought that we probably should is that the market likes listening to central bankers and pays attention to them. My question to you is, why should I believe what this man says?
Well, I think you've certainly seen that the messages coming out of the Bank of England and other central banks have been able to move the market recently. So if you look at the change in interest rate expectations that have come out of, that have been driven by the messages from the central bank, they've been reflected not just in the value of sterling, they've been reflected in the shape of the UK yield curve. So I think it's
wrong, though, every time. And then he has to turn around and say something completely different.
Well, I think what he's been doing is reacting to the data. So the data has been softer. It's been softer both in terms of the growth data recently, and importantly, we've seen inflation, which has been persistently above the Bank of England's target, start to move back down towards target, and therefore I think some softening of the message about future interest rates is appropriate.
Yeah, but Richard, this is Guy's point, right? It's like, why not just look at the data? Why does the market listen to Mark Carney, who interprets the data? And do we have ourselves a little bit in a twist?
Well, we care about two things. We care about the data, and I think it's important to look at the data over time. It's also important to try and understand what the central bank's reaction function is to that data. And I think that impacts...
Do you understand that? Do you understand what the Bank of England's reaction function is?
Well, it's been changing, I think, over time. It's fair to say, which I think why it's important to
Does forward guidance work?
So I think markets want to have certainty. So markets react well to certainty, to clear forward guidance, clear messaging about what that reaction function is, how the central bank is going to respond to data as it comes out. I think when you look at the experience in the US, actually we've had very clear and consistent messaging, which has led to, I think, the market starting to price in further rate hikes in the US. When I look at the UK, the greater clarity is always well received by the markets.